Everybody, Craig from Comp Travel and URComped here. I've got a very special guest, Matt Sodl. He is the founding partner, president, and managing director of Innovation Capital. Matt, thank you for being here.
Happy to be here. Good to join you.
So, Matt, why don't we lead off by telling everybody, what is Innovation Capital? What do you guys do?
We are a boutique investment bank, financial advisory firm that focuses on providing mid-market companies in the gaming, leisure, hospitality, and retail restaurants category. We advise them on doing transactions, whether it be raising capital, advising on mergers and acquisitions, helping them with their balance sheets to the extent that they get into trouble with creditors. We do valuations and fairness opinions.
So I want to get in. I've got a lot of questions about what you guys do because I think it's fascinating. But why don't we go back? So in doing research for this, I saw that you were a stud football player. We talked a little bit off camera about how your son is coming up. He's going to be a stud as well. And so you grew up in rural Pennsylvania, not exactly land of high finance, but your all-state football career took you to Columbia, where you were a 3-year starter on the Columbia football team in New York City, and you earned Ivy League honors. So that's amazing. I'm envious of your football career. Now, when you so connect the dots between playing football at Columbia to ultimately having Innovation Capital in Southern California.
Sure. After Columbia, I went to work for a small investment bank on Wall Street for 3 years. I wanted to pursue an MBA after that 3-year stint, and I ended up coming out to Los Angeles, and I went to UCLA, got my MBA in the early 90s, and always had an interest in finance because of the value creation that capital brings to bear for companies. So got my MBA and went to work for Citicorp Leveraged Finance, where I learned a lot about leveraged buyouts and highly leveraged transactions from a commercial bank's perspective. We banked a number of the biggest supermarket LBOs that took place in the mid to late 90s. And after that, I wanted to do more conventional investment banking involving public offerings and high-yield debt offerings and more M&A from an advisory perspective. Then I went to work at a company called Schroeder Wertheim, which had a leading gaming hospitality research analyst by the name of John Rose. And in that banking practice, I got to learn the industry and meet a ton of senior executives in the industry who were up-and-comers through the gaming industry. And I cut my teeth in learning the business. And then I ultimately went to work for Merrill Lynch in their gaming leisure practice in Los Angeles. Was there for about 5 years before leaving there and going to start innovation in the early 2000s.
So in the mid to late 90s, was California tribal gaming already exploding at that point, or what was kind of the landscape of gaming in the U.S.?
It was, when I was at Merrill, it was just about the time that they entered their compact with the governor of California to legalize commercial gaming, and that set in motion a ton of casino gaming financings in the state and candidly across the country.
And is that what prompted you to start Innovation Capital? And do you see an opportunity on the horizon and you're like, I got to launch my own business, or what happened there?
I thought the business in the late 90s was all about, particularly Merrill Lynch and the large firm, was all about a pay-to-play kind of mentality, meaning if a large investment bank was willing to extend credit to large gaming companies like MGM or Mirage or whomever, that's how you win business. And I wanted to do more. I wanted to do more mid-market banking because I felt like I'd be able to have much more of an impact. And candidly, I saw this opening in the mid-market. It was way underbanked, and I felt at that time there'd be a lot of opportunities to create relationships and build a firm, really focusing on those mid-sized companies.
Now, I don't know what investment banking is like, but I mean, it sounds like the stakes are super high. I've looked at your website, some of the transaction sizes. There's 2 commas. I even saw a 3 comma deal in there. So when you decide you want to launch Innovation Capital, were there some non-competes and some things you had to fight through in order to leave Merrill Lynch, or was it pretty straightforward, or what was that like?
No, straightforward. I mean, the business was all about relationships, so we didn't really have any non-competes. What I ended up doing in setting up the firm was looking at where all the gaming expansions were taking place. I saw that getting into a lot of the tribes and the smaller companies was built upon relationships. So I ended up partnering and creating our firm, Innovation Capital, with a number of partners that were in the gaming feasibility business. When a tribe or a company in a casino is looking to buy, build, or expand their casino, the first thing they do is to hire a gaming consultant to help them dictate how big that market opportunity is. How much revenue do they think they'll be able to generate from the slot machines they put in their property when they build it? So my partners at this consulting firm, Innovation Group, they had tons of relationships across the country that I felt could be monetized by creating financial advisory services to their businesses. And we got into a lot of doors based upon those relationships.
And so for people that aren't familiar with investment banking, how do you guys make money?
So we get retained and engaged. It's called engaged in the form of a contractual letter agreement with that company, and it'll be on a very specific mandate to execute a transaction. So if a company is looking to sell their business, as an example, we as a firm will we'll do our due diligence. We'll put together a marketing document to sell that business to other third-party buyers. We put together projections with the management team of that company. We put pretty pictures, we make it look nice, and then we go out on an exclusive basis to run a M&A process. We then orchestrate an auction to bring qualified buyers to the table. We ask for bids, an initial round, and then we have those parties compete against each other based upon price and terms. And then we determine who's the most qualified buyer from a financial perspective, from a licensing standpoint, and who could really get the deal done. When we determine who that party is, our client enters into a definitive agreement with the buyer of the property, and we help work with the legal team to get those documents in shape. And that deal gets signed. It gets submitted to the regulatory authorities, whether it be in Colorado or whichever state they're in. And when that buyer gets licensed and is deemed worthy by that state to buy that property, the transaction closes. We get paid a success fee, and we go on our way. That's a sell-side M&A process. Financing works similarly. But instead of reaching out to prospective buyers, you're going out to financing sources and trying to get the best financing execution for your client. Once that's completed, we get paid a success fee. So the business of investment banking is we're working on behalf of your client to represent their interests, to get the best execution, and we get paid, we get compensated nicely when that transaction is done in the form of success fee.
And you touched on that, and thank you for that. That was an excellent explanation. And you touched on a little bit about what sets Innovation Capital apart from maybe the Merrill Lynch's or the Goldman Sachs or the huge investment banks. But maybe you could drill in a little further. Like, what do you think within gaming lets you guys deliver more value than one of these larger investment banks?
I think the breadth of the relationships that we have, we really know candidly everyone in the industry, from large, medium to small. including both commercial gaming operators, Native American operators, tribal operators, as well as commercial gaming equipment companies. So we really covered the entire industry in depth. I think large firms tend to be very narrowly focused on executing the big deals. The bankers at those large firms, they get paid to do billion-dollar deals, right? And we are not afraid to take on smaller deals because we know as part of the relationship, our client may need us to do that deal, which may lead us to a bigger deal down the road. So in a lot of ways, we are a lot more nimble and flexible in terms of the types of deals we do, and in terms of the category, we tend to look at a lot more things than the big firms.
Now, so getting into it sounds like specifically like the sell side or buy side negotiations. Is the starting point always of a casino that's already been built? Is it always just EBITDA? I know that's seems to be, from an outsider, seems to be the number that the financial numbers thrown around most often. So is that generally like a multiple of EBITDA? Is that what you start out at and try to argue for a bigger multiple or lesser, depending on which side of negotiation you're on? Or what are those negotiations like?
Yeah, EBITDA it stands for earnings before interest, taxes, depreciation, and amortization, which is a financial number that is representative of the company's free cash flow. That is the number and the metric that is used to value businesses. You apply terminal multiples on that EBITDA, and that's how you arrive at the enterprise value of the company. In some situations where companies don't make EBITDA, it becomes an exercise in determining what cost savings could be taken out of that business to result in for the buyer's standpoint, what they can make off that acquisition, at which point it becomes a lot more creative in terms of thinking on how to do deals.
And then again, this is from your website. I noticed, so there's sell side, buy side, and then I also saw there's placement agent and financial advisor. I mean, real quickly, what's the difference between those two?
A placement agent really acts. That role really acts and serves as we're directly placing companies' debt or equity, as an example, with an investor. We get paid a success fee when that deal closes. Financial advisor on a financing is where we would, let's say, in a larger financing, as an example, we would act as an FA, but we would bring in a third-party large underwriter who, let's say, it's a $500 million debt offering, where you need to have 25 to 30 investors in the deal. Large firms are better equipped with their capital market desks to sell that large transaction. So at which point we advise our client, and we work with that large underwriter and they're the placement agent in that situation. So we get paid success fees both ways.
Now, so one thing that's unique about gaming is that so many of the clients that you work with are technically on sovereign land because they're a tribe. So I'd imagine a lot of the recourse that most creditors could get if somebody defaults on a loan, they may not be able to on sovereign land. So what steps made you have to do, or what's different, I guess, about setting up big debt financings for tribal land versus maybe a U.S. publicly traded company?
Yeah, so commercial casinos, the lenders that can have a security interest in the underlying real property. As a mortgage lender would have the ability to do that for your home, right? They get a mortgage, they get an interest, a lien in the underlying property. On commercial gaming, the only real lien or security interest you can have is in the revenue and the gaming equipment. You can't have a lien in the underlying land and the property because it's owned by the tribe. And they're the party that's only licensed or have the ability to own that property. So lenders effectively have their interest is in the machines. So if situation goes bad and ultimately a workout needs to take place, the lenders have the leverage by virtue of their ability to shut off the machines and work out it with the tribe, which they would never do. But it gives them the financial leverage to negotiate with the tribe, because the tribe doesn't want those machines shut off, because that cash flow provides distributions to the tribe, which they need. But the lenders need to get paid interest. So a negotiation needs to take place between the tribe and the lenders, because ultimately both parties are aligned. The deal needs to work for both interests.
I mean, that sounds like pretty strong leverage the bank has. I mean, considering how strong it is, they can ultimately cut off the cash flow of the casino. Do you see a premium? Is there still a higher cost to lending or to borrowing for the tribes than maybe a commercial casino?
I think there is an inherent premium that the tribes do pay for capital because of the fact that the borrower or the creditors can't have a security interest in all of the assets, right? It's probably a couple hundred basis points is what I would say. But some of these large tribes are among the most profitable casinos, own the most profitable casinos in the country. So they borrow at very cheap rates, even though those lenders only have a security interest in the revenues and the machines. So, but it's a case-by-case basis.
So a lot of these casinos, as you mentioned, they're super profitable. I mean, I'm in Dallas. We've got a couple that are right over the border, WinStar and Choctaw Durant, that I've heard the numbers they do are, just mind blowing. So a lot of these casinos are stacking up cash. Why do they need to borrow money?
Because many of the tribes see opportunities to continue to grow their businesses, adding more square footage to their casino footprint, adding more machines, because they want to just be clear. If there are no constraints put on them by the state government, they will get as big as they can, right? In terms of number of slot machines. I mean, some of the casinos have 4,000 or 5,000 slot machines in the country, which would make them huge. But they add retail, dining and entertainment. They add sports facilities. So they borrow to finance those expansions. But the tribe's in the business of owning these businesses so they can take the distributions and pay them out for their tribal government to put in place social programs, health, education, and also putting distributions out to their members. That's why they're in business. So they'll borrow money because they don't necessarily want to put all their own liquidity into these properties. They'd rather use other third-party cheap money and can maintain their distributions and funding into the tribal government.
Thank you. That's a perfect explanation. It makes a lot of sense. And then also you represented a massive transaction that I don't care how much a tribe's making. I don't think they are sitting on $1 billion plus. Maybe they are, but that the Porch Creek Band used to buy Sands Bethlehem. And for me, I'm not sure if that was the first time a tribal government had purchased a big property off the reservation, but it was the first one that came across my radar. So maybe you could talk about how that deal came about and the significance of that purchase.
Yeah, so we were hired by Porch Band of Creek Indians to execute a diversification strategy for them, and we looked at a number of different properties. They had a desire to kind of expand within the Southeast and look for some very sizable properties. It's public. They made a purchase intention for a property in Bossier City, the Margaritaville, that was there. That deal fell apart over Margaritaville kind of trademark licensing issues. But then the tribe subsequently went and bought a couple of properties down the Caribbean, and those were more resort amenities to enable them to offer vacation type rooms for their customer base in the Southeast to go and visit for their good players, right? And then they continue to be interested in diversification. So their Las Vegas Sands was in the middle of negotiating, and this is all public, so I can talk about it. Las Vegas Sands was in the middle of negotiating with MGM. The deal was rumored to be falling apart. There was a discussion that took place, and Las Vegas Sands was interested in selling at a certain number, and that ultimately became the number we ended up selling at for $1.3 billion. And we stepped in there, and the tribe certainly hadn't done a deal that large before, so third-party financing had to be executed, and we ended up partnering with another large firm to get that done, and it got done, really well executed in the capital markets.
So to dive in a little bit deeper, because I actually do remember, I'm glad you refreshed my memory, that MGM was trying to buy that property. Now, so you already have the relationship with Porch, and you knew they wanted to diversify. Were you reading the newspaper, reading online that this deal was starting to go sideways, and then you call Sheldon Adelson, or what did they inquire about it, or maybe you could get into a little more detail, because I think it's just fascinating.
I can only say so much, but I would say that we were retained as Porch's financial advisor to execute a diversification strategy. So we were looking at a number of different properties, and we track literally every M&A deal and or potential deal that's out there on a daily basis. And it was not. It was pretty widely known that there were issues that were taking place in that deal. Between these large companies, when they buy in or sell properties, it generally happens pretty quickly if it's going to happen. But the deal was being extended and delayed for whatever reason, and we saw that as an opportunity. And Porch Bandit Creek Indians ended up reaching out to through our relationships into Las Vegas Sands, and we ended up making it happen.
So that deal, Sands was on the market, and I've heard it said too that they didn't feel like it fit their model, that property in Bethlehem. But let's say the casinos in the Caribbean, were those on the market that and those then you guys just
being widely shopped?
You said they were being widely shopped, and is that generally how when you're buy side, is that generally how these casinos make it known, hey, we want to sell? It's not so much you're picking up the phone like, would you guys be interested in selling? Or
generally, if you're on the buy side, it runs the gamut from properties being shopped to approaching properties that are not on the market. And when you approach a seller or a company that's not on the market, generally the response is, no, thank you. Or sure, I'm for sale, but need some time to think about it. But generally, it's these are not necessarily cold calls, right? They're calls into companies we know and have long relationships with, and ultimately, you got to find that right balance between a seller saying, I'm willing to sell, but I want $1 billion for it, or someone who's willing to be reasonable, because ultimately it comes down to buying these things on a multiple EBITDA, and the market's pretty well established.
Now, how often does a outside group that does not have experience in gaming come and say, hey, I want to buy a casino? And I ask this because I spent some time in Lake Tahoe. That's where I got into gaming. And Lakeside Inn, which was like the local spot, closed down due to COVID. And so me and a buddy were like, man, I wonder what it would take to buy that casino. Like, So this is, you're, kind of indulging in a fantasy, but
Sure.
how often do people from outside of gaming come and seriously make an attempt to buy a casino? Do you have any experience in those types of transactions, or what's that like?
It happens, but generally those situations don't end up working out, candidly, for management and execution reasons. When we are representing a seller of a casino, we're approached by guys all the time who say, I would love to buy this property. But one of the first things we do is we ask a couple questions. Number one, what's your financial wherewithal, liquidity, and what is your ability to get licensed, and who's your management team? And if we don't have clear-cut, very black and white answers to those questions, generally they won't be permitted into a process. If it's fuzzy on the financing side, well, I've got this oil well and or a water field, and we can raise third-party bonds in Europe, and they're bearer bonds, and we hear those stories. That's one example. Generally, not credible, right? And if someone says, "Oh, my uncle was a casino manager 30 years ago, so I know a little bit about casinos," again, not generally someone that would stand up well in an M&A process and in front of regulators. And then the third element is, can they be licensed? And if we don't get a clear-cut yes on that answer, it's not going to. We wouldn't allow that party in, because ultimately the questions we're asking are the easy ones. The gaming regulatory bodies, whether it be in the regional state or Nevada or Atlantic City, they ask extremely difficult questions, and they have examiners who could come unannounced to your house and ask to go through your file cabinets, because they're looking. Ultimately, what they want is casino owners to come in who are going to pay their bills. So they want to know that the party that they're investigating isn't someone who's not going to pay their taxes, and or is hiding a misdemeanor or felony, or you get the picture, right? So they want clean-cut guys who don't have a track record negatively, who are financially viable, who have gaming experience, who could come in and run these properties. Because ultimately, when things don't go well, it creates issues for these gaming regulators.
Understood. And it's because with our business, URComped, where we're a marketing entity that, yeah, we're involved in gaming in some respect, but we don't have to get that key license. But it's still a pretty thorough investigation we have to do. Now, with you being involved in these big financial transactions, are you having to jump through any regulatory hoops?
So we as a firm are licensed by FINRA, which is a division of the SEC. So we're a broker-dealer firm. So we have financial regulatory elements that we have to adhere to. We're audited, and we're licensed. We've got our Series 763 and whatnot. So we are treated in the same category as every other investment bank in the United States.
Got it. Okay. But you're not having to go to the Nevada Gaming Control Board or anything like that.
Yeah.
Which makes sense, because you're not turning on a slot machine or anything. So with the current situation, obviously casinos are being put in financial situations that they never imagined, where for months at a time they're being closed down. How do you see that this current situation will impact M&A deals over the next 12, 18, 24 months?
So, valuations have come down a touch. Certainly, I think the pace of M&A activity, aside from the deals that are taking place because they have to, I don't think you'll see sellers in this environment proactively put their properties on the market, because the financing market is just not what it once was, right? Companies are willing to take a certain amount of risk Will they lever up their balance sheets to go and make another acquisition if they feel it's appropriately priced? I think they would, but it better be a well thought out deal. So COVID, with closures, property closures, with social distancing limitations being put on these properties. I mean, some of these properties only have 25% of their floor open, casino floor open. Some have 50. But I'll tell you, the numbers that a number of these casinos are putting up, even with shrunk casino floors, they're doing phenomenal numbers because there is so much pent-up demand, and because these casino businesses have had to really take a look at their cost structure, shrink it to a point where they're just providing the basic amenities for their customers. So they're producing pretty good EBITDA numbers, which bodes well.
Nice. Yeah, that's interesting. Well, this has been fascinating from my end, and I appreciate you telling me that if I want to buy Lakeside Inn, I need to have the financial wherewithal. I need a management team. So, all right, I'll work on that. Is there anything else like that I didn't ask you about, or anything interesting going on? And
the one thing I would add is internet gaming and sports betting. Those are two things that are out there, and you see some states like New Jersey as an example, and Pennsylvania as well. They have internet gaming, so folks are able to gamble from their homes. That has proven to be a huge growth part of the business this year. So look for that to continue and be a trend that could perhaps spread across the country as states look for other ways to monetize gaming to fix their state budgets. So that's one. And then two is sports betting. While we don't have sports today, we will certainly at some point. You got the NBA, the NFL, MLB. Let's hope that we're able to navigate these COVID spikes to have sports. But there is such a pent-up demand for sports betting. It's going to be huge. So look for that to be another amenity, another thing that consumers are able to have. But just be clear, casinos don't make much money off of sports betting. They take a 4 to 5% on every bet, but it balances out. It's at the end of the day, it comes down to providing an amenity that creates more brand loyalty for their customers. So look for those two things to be a near-term trend here as we roll out the next 12 months. So, okay.
Well, Matt, thank you so much. I'm glad we started talking about sports and your sports career, and now we're wrapping up talking about sports betting. So it's a perfect circle. Hopefully we can do this again. This is fascinating.
Very good. Thanks for reaching out, and hello to all your readers, and we'll talk down the road. All right.
Thank you.